Welcome back, traders. In this video, we are going to be talking about advanced market structure. And please don't let the word advanced get you guys all scared because honestly, guys, if you know me, I love to keep it simple. And this whole video is to really understand how I actually get my entries. This concept is going to be very, very, very important when we talk about liquidity and when we talk about entry confirmations. So, like with every other video, I'm going to keep it simple, okay? So, what AR actually stands for, or how I like to define it, is basically anticipating retracements. And the reason why I call it AR is because it's easy to really just say it in the short form AR, but it just means that we are anticipating a movement in the market to occur. And usually it's going to be a retracement. Okay, so write this down. It's going to be AR is short for anticipating, anticipating retracements. And boom. Okay. So AR is short for anticipating retracement. And so what I want you guys to pay attention to, if you are trying to, get in for buys, guys, what are two things we need to happen? Okay. So this was talked about in my different types of markets, bullish, bearish, and sideways markets. We need highs to be broken and we need lows to be respected. Okay. So the reason why our AR for buys is going to be in this area is because when we push up, right, we are expecting that price may create some type of what? A lower high in this area. Okay. And we are anticipating that because just based off of structure, we know price likes to do this. It likes to test previous lows in a bearish market to continue pushing down for sells, right? So with these AR levels, they are great points that you can anticipate movements to occur. And this can actually help you with spotting liquidity. And when we get into my hunting liquidity video, this will make sense. So I really want you guys to get this concept really understood so it makes sense. So when you guys look at my strategy, my entry confirmation, that I'm really looking at this a lot of the times, right? Because realistically, guys, if we know that we're gonna retrace here, right? Wouldn't that help you avoid having FOMO? Because realistically, what if we just got a strong, strong, strong push candle like this, right? And you see this and you're like, oh my gosh, price is just flying without me. But how I kind of was like, okay, I need to figure out a way where I can have less FOMO and be able to get into the market at a great point in the market. Buy low, sell high, basically, right? And so if you want to, get into the market, you see this and you're like, okay, I know because of, how structure is presented, I know we are going to retrace at this point and I want to get in for buys because I'm like, okay, this might be a strong support zone right here. If we can hold here and we know price is going to push up and we're going to get a retracement here, okay? What matters after price retraces here? As long as we respect this previous low, once you guys say price is going to try and create bullish structure, it would because this is a low, right? And now because after the retracement, we held here, we are respecting this previous low, creating a higher low, right? And it doesn't, and didn't I just say a couple minutes ago that price does what? It respects lows and it breaks highs. Now this is the next opportunity for price to shoot up. And okay. And in my part two video, we will talk about if these levels get broken and they don't retrace. Because remember, guys, not every anticipating retracement level is going to respect. Majority of the time they do, but if they don't and price is just super strong and going up, we can still get entries just by looking at a zone or looking at the AR level to be broken or to be respected to retrace. Because remember, it's called AR for a reason. We are anticipating. We're not 100%. We're just anticipating a reaction in this area. So whether we break it or whether we actually hold and retrace, we are ready because we know what could happen. If price respects it, right? If price respects this previous low here and creates a higher low, what is that? That is bullish market structure trying to be created. And what does that mean? What are two things we need? We need highs to be broken and we need lows to be respected. So immediately, guys, you should be looking at what these previous highs here. These previous highs, they have to get broken in order for the market to continue pushing up. So after I see that price respects and holds at this level, at this anticipating retracement area, then we know what could happen. Price is going to do what? Try and break this level. And you guys know what once is what? Resistance will then become what? Support, right? If we push off of this, we can then use this as a support, a floor to potentially do what? Create bullish structure and continue pushing up like this. And it's really that simple. As far as anticipating retracements for sells, guys, you are going to be seeing bullish structure on the left, and you're thinking that price is going to change trend direction, so you're going to see bearish structure on the right. For buys, we saw bearish structure happening here. We maybe formed some type of support, and now we're trying to think, okay, we could potentially do what? Keep pushing up to create what? Bullish structure, okay? So that being said, guys, on this side, okay, for anticipating retracements, these are going to be what? AR levels for sells are going to be previous highs in a bullish market. AR equals previous highs in a bullish market. Okay. And the same reason why. If we want to push higher, we know price is going to do what? It's going to test this previous high and it's going to continue creating bullish market structure. Okay, we might do something like this, and we might just continue pushing up to create bullish structure. So by seeing this and by being like, oh my gosh, price just dropped this hard. Oh, I'm scared I just missed it. But if we know price could potentially retrace from here, this allows us to do what? Pay attention to this high here now. Because now we're basically like, okay, you know what? I'm okay with price tapping into this level because automatically I know we could either break it, okay, and I could find a new bias, a new entry point, or we could respect it. And then I'm already looking to see how are we respecting structure, right? Every single time you see price move, you should always be thinking, how is structure being represented? Two things need to happen for sells and two things need to happen for buys. For sells, lower highs and lower lows. What does that mean? Highs need to be respected, lows need to be broken. So if we come here, right, we retrace and we're holding, guys, that is bearish market structure trying to be presented, trying to be created. And we could easily continue creating bearish structure like this, okay? So AR levels are just levels we are anticipating retracement. We are basically saying, yes, we know that bullish market structure and bearish market structure creates higher highs and higher lows. And in order for them to continue, higher highs need to be created, higher lows need to be created, lower lows need to be created, lower highs need to be created. But if we know that because price would try to create some type of structure to continue, it will really, really try so hard to continue the trend direction it's going in. What would we need to see in order to get the opposite? And if we hold at those levels, okay, creating what? A lower high, but then we start respecting lows, isn't that buyers trying to gain control? It is. And if we see price creating a higher low and then it retraces and it's creating a lower high, isn't that isn't that sellers trying to gain control? That's sellers trying to gain control. This is buyers trying to gain control by doing what? Creating a lower high, creating a higher low. So anticipating retracements are areas in the market we are anticipating a retracement to occur. And when you compare this with liquidity and other entry confirmations, just by looking at highs and lows, guys, this is so powerful. Majority of my entries are timed perfectly, not perfectly, but well, because of this concept. It's crazy because, guys, do you hear me saying anything crazy? It is backed by market structure. It is really that simple. I'm not even saying nothing crazy. I am just saying, okay, we are anticipating a what? A lower high to be created. Let's watch the previous low, right? Let's watch the previous high. I'm basically saying We're watching to see a lower high being created. Let's watch to see what how the low that is created is represented. We are waiting to see a higher low being created. Let's see how that lower high is being presented. Let's see how structure is being formed. And that's basically what we are looking at. So I want to show you guys an example so this can really, really make sense. If you guys can understand this concept, part one and part two, guys, you are already more than halfway to understanding how I see the markets the way I do. And remember, guys, everything is just structure. It is all structure, nothing fancy. I'm not using fancy terminology in this course for a reason because this is how I see the markets, okay? So let me show you guys these examples. Bearish structure is me represented on the right side, okay? Guys, as you guys know, when we are looking for AR levels, they are going to be what? Previous highs in a bullish market. The reason why is because what? We know those levels get to love to be tested to create what? Bullish structure that looks like this, right? So if we can anticipate a retracement there, and then we can look at the reaction that occurs after it retraces, and we see how price is respecting or breaking structure, that can allow us great entry confirmations right there. Okay. That being said, guys, look at this. Okay. So let's just say we have some type of support zone. I'm just going to mark this like this. Okay. All right. Everything. I'm going to just start marking some highs. We have a high here, also a high here, and we have a high here. Guys, look at how beautiful this really is. Okay. And I want to go on the 2 hour time frame only so you guys can see this a little bit more clear. Okay. So in a bullish market, right? We may we may do what? We're gonna do what? Test previous highs to create what? Some type of what? Higher low. Guys, this is so imagine just seeing this and being like, oh my gosh, I just spot an AR level, allowing me to do what? Anticipate a retracement. So not only get into the market too early, but know that, oh my gosh, okay, we see an AR level here. We're looking at this structure here. We're seeing that, this structure is being presented. Let me get into the market. And you can get more confirmations off of that, right? So that being said, guys, I said, if you are looking for sells, AR levels, we can say AR levels is going to be what? It is going to be previous highs in a bullish market. And I wanted to go on the 2 hours so you guys could see this a little bit more clear. I'm going to go back onto the 4 hour, right? AR levels for buys or for AR levels for sells. AR levels for sells are going to be previous highs in a bullish market. Remember, this is a bullish market. We're creating higher highs and higher lows. And do you guys see this? Oh my gosh. Do you guys see how we came here? We pushed here, right? This previous high got tested to try and create a higher low, right? And we retraced, right? But what did we fail to do? We failed to do what? Break previous highs. If you guys see previous highs failing to be broken, right? What is price isn't doing? Price is not creating bullish structure. It's not breaking highs. It only respected this low. We need two things to happen in order for price to continue pushing up, right? If we are not breaking this previous high, how do you expect to create a new higher high? You can't. You can't, right? You literally can't. So immediately when you see this candle here, right? Let's just go here, right? You are in the market and you're like, okay, Meeks, you're like to yourself. In my head, I'm like, Meeks, do not get in too early because you have seen this multiple times that this level is a great level for price to create a higher low. But if we create a higher low and we respect this level here, what structure is being created right here? A lower high, right? So if we're creating a lower high and we respect this level here, guys, what does that mean? Sellers are trying to gain control. Now, what matters, right? What matters now? It matters that we break this. You know why? Because if we break this, we can do what? Start creating bearish structure. We want to start creating bearish structure. So all these highs here, all these lows here and to the left, they must get broken. And once we can break this level, that AR level, we know what can we do. We can start marking levels that need to continuously get broken in order to continue pushing down, right? So this would be the next level here. This would be the next level here. This would be the next level here. Beautiful. And let's continue. This would be the next level here. We need lows to be broken in a bearish market, and we need highs to be respected immediately. When you see an AR level, you are looking at the previous high or low that was created to help you confirm entry confirmations and trend direction. Okay? So, that being said, this should be what you're paying attention to. You know there's an AR level here. If we don't break it, we're retracing. If you understand what a break of structure looks like, you know we're not seeing that here yet. I don't see a break of structure, right? I don't see a break of structure. I still don't see a break of structure, right? But I see price retracing. Okay, in your head, you should be like, okay, you know what? Let's see if we can, respect this. If we can respect this, right? And we can hold here, guys. Oh my gosh, what is that? A lower high. Then what matters now? This low that was created gets broken. I need a point to this. I need like, guys, this is special stuff right here. I'm telling you, we need this low to get broken. If we are truly bearish, what should happen? We break this, we respect this high, and we start breaking this low that was created, which is technically a higher low in a bullish market, but we can still use that as a low that needs to get broken in a bearish market. Guys, I am so passionate in this right now because this is what changed everything for me. And it's so crazy because this is just structure. It is just structure. And this is why you can use this for almost anything. Because this is how structure is created. And I have looked at so many different assets and I see the same stuff. Okay. So if we break it, guys, we're breaking a low and we're respecting a high. Those are two things that are happening that we love in a bearish market to create what? Lower lows and lower highs, ladies and gentlemen. And look what price did. Look, let's just look. Let's just take a look. Let's just take a look. We were so bearish we didn't even well, on the lower time frame it would have been a retest, but it's a 4 hour, so you didn't see that. But we anticipated a retracement. We held. Price broke. And then you could got into what? Sells, right? Look at that. And what did we do? We just kept on what? Look at how these levels are actually being tested, guys. Pay attention. Guys, look how these levels are being tested. Previous lows, right? Are where price loves to test to create a lower high in a bearish market. Once we break it, previous lows is where price likes to test in a bearish market to create a lower high. And when we start doing the opposite, we start respecting lows and we start, breaking highs. What is that? That's price trying to create bullish structure. And what are we doing here? We are creating bullish market structure. Guys, this is how simple it has to be. So imagine this. Imagine you go on to the higher time frame. Like you were marking your chart and you like, okay, I know as long as we respect this level, we're gonna, retrace pushing up, right? But and like even let's just see it. From here to here, okay, we have like 57. Okay, 57, whatever, pips, whatever we want to call it. So if we saw this, we're like, okay, we know that we're anticipating a retracement here, but if we hold and we fail to break these highs here, and we can even see that on the lower time frame, what do you think? What are we gonna do? Price is most likely gonna push down lower and then continue selling down, right? So this is really how AR levels are. This is how simple it can be. We're gonna respect, retrace, respect this previous high to continue selling down, right? And so if I knew that we were respecting this previous high on the 4 hour time frame and we failed to break it after this AR, I could literally go onto the lower time frame and be like, okay, you know what? Let me get into the market. Let me wait for price to, and this is just on the 2 hours. So remember, this candle here on the 15 would have been a beautiful retest. Let me wait for the break of structure and then price to retest, okay, and then just sell down. Beautiful. And when we talk about entry confirmations, I will go more in depth about all those confirmations I would be looking for, breaks of structures, all that type of stuff. But in this, I want you guys to really see this. I need you guys to really understand this. Again, I look for this on the 4 hour to help me confirm overall trend direction, right? The reason why is because if I know we're respecting this, I know, okay, we might see sellers gain control on a long-term perspective or a longer term, right? Which is what we did, right? And I know, and like remember, this is a higher time frame, so this is a lot of pips. Like if you're a scalper, this is like already 200. And when we go all the way down, 400, 500, just by the simple use of that, right? And then if I was to go on the lower time frame, I'd just be looking for my entry confirmations to be like, okay, let me get into the market at this point, and then let me TP here, blah, blah, blah. Just like that, okay? I use this for entry confirmation, so this is why I like to, go about it this way, okay? So that being said, I'm going to remove all my drawings and I'm going to show you guys examples on the 15-minute time frame because I want you guys to understand how I see it before I would get into the markets because I use the lower time frame for my entries, right? So let me show you guys that. Okay, guys, so let's just say we created some type of support zone, okay? We established that, price was really strong at this level, okay? And then we ended up marking it as a support, okay? So, and we were like, you know what? I really want to get in for buys. I like how strong the support was maybe on the higher time frame. I like how we're maybe respecting, all these lows to the left here, right? Let me see if I can get in for buys. Let me see if the trend direction shifts from what? Bearish on the left side, which is we're really just looking here. So bearish on the left side to what? Bullish on the right. Okay? Let's remember two things we need to happen for buys. Highs need to be broken, lows need to be respected. But if we see this structure being presented on this left side here, and we notice what? It is bearish market structure. How can we shift this to bullish? How can we confirm that sellers are no longer in control? Right? We can find an AR level. We can be like, okay, you know what? I know because structure told me so that previous lows in a bearish market is where price likes to create higher lows in a bullish market. I can mark this level. Okay. So I marked this level. Now that I marked this level, guys, what is important? It's important to see when we come here, do we break it? And I will show you guys what happens or what to look for when price breaks it. Or do we respect it? Do we retrace? Because we what? Anticipated a retracement. So we're going to call this an AR, right? So because I am anticipating a retracement there, what does that mean I have to look for in order to confirm buyers gain control? We respect these lows and we break highs. No, 100%. So I'm going to start this because I want you guys to pay attention to this. Pay attention to this key level. If we come here and we just fly and break it, that's even better because it just shows you buyers are just so in control that we just broke this level and we're trying to create what? Bullish structure. Let's see if we break it the previous high and continue pushing up, right? If we respect it, this is where we have to make sure we have our confirmations for buys to ensure that price isn't just creating a lower high to continue pushing down and take us out. Okay, so what does that mean? We're going to wait for price to hit the AR level, right? And guys, when you see it hit the AR level, sometimes it's not going to be perfectly like this. Okay, maybe it won't hit the line exactly how you want it. Guys, remember, my lines are so specific. Even if we come into the area, that is better than nothing. So I'm gonna mark this level here, right? So if we come, I don't, so I'm basically like, I don't care the reactions that we get here. I don't care if we don't break it yet. If we do not break this level, this AR level, we know we have to watch this low. We have to watch it because we don't want this low to get broken if we want to buy, because that buyers don't do that. We respect those and we break highs. So if we respect this low here and then we start pushing up to break this AR level, and then maybe we retest it or we start breaking highs like previous highs here and respect lows, baby, that is what? That is bullish market structure. And sometimes you guys will notice me draw, highs here, like on the highs here, because what? I also say that highs can also be called resistance because they're just highs is the ceiling. It's the ceiling is higher than your floor. A ceiling is up above. So it can also be resistance sometimes. So I want to ensure that when we do break, we break the next previous highs continuously in order to, let's just say, in order for price to, maybe if we were TPing this high to hit this level up here. Okay. So that being said, guys, let me just delete this because I really just want you guys to pay attention to the AR right now. That being said, all I'm going to be waiting for is to see how we respect this low. Do we respect it or not? Right? Didn't break it yet. All right. Didn't respecting it. We're respecting it. Look, even came to here, didn't break it. Right? Now, we're just creating, now we can clearly see we're creating what? Bullish structure. Right? And now we just have to make sure we break that AR level. And then what do we want? We want price to continue pushing up. Right? You see how just here we're respecting lows and we're doing what? We're breaking highs. We finally retraced from the AR again. You guys see that? We retraced from this AR again. We weren't strong enough, but when we came back down, we still respected that previous low. So we tried again and we finally pushed up, but we failed to break this previous high. So it came back down. Okay, some people would say this is liquidity. When you talk about liquidity, this will make sense, right? So we came back down, tested it, still didn't break structure. If you guys watch my break of structure video, you guys know this is wicks. No, there's no bodies going through this zone. We didn't break this low, right? Maybe we swept it, but we didn't break it. So we gained strength to do what? Continue pushing up. So just by seeing an AR level, guys, you could have been like, I'm anticipating a retracement here. I can wait for price to see if we hold here, which we do, to then what? Enter in and then just ride price back up, right? Even if price hit your entry or entry here, this still would have been a good setup. This still would have been a good setup. And even for some people, they might have seen this and they might have saw, ooh, price is failing to break previous highs. We might push down. This is already 100 plus pips, right? So they might have been smart and been like, okay, let's see if we start, breaking and respecting this previous low, this major previous low. These little candles here, yes, they are important, but remember, overall structure, like this low here, this low here, this low here, are essentially the most important lows. So we respected, and the price just decided to do what? Continue pushing up, right? Guys, this is just part one. I need you guys to bear with me because this is literally the basics of how I get my entries. When we pair this with liquidity, this will make so much sense. The reason why I say this is a previous low, okay, a previous low in a bullish market, I'm going to say in a bullish market, is because realistically, on this left side, guys, we have bullish structure being presented, right? And when we retraced here, we attempted to create a higher low, right? We attempted to create a higher low. So that basically is what? A low in a bullish market. I want you guys to make sense of that as well. Okay. If you think that's a little too confusing, just say that AR levels can be previous lows. Okay. That simple. right? If you can't wrap your head around that concept, just say AR levels can be previous lows. AR levels can be previous highs. Just wanted to throw that out there just because I know sometimes you guys might get confused as to why I say that this statement, okay? So, that being said, guys, let me just reanalyze this. Let me just delete this. Beautiful, okay? We have a support zone, you could say, whatever. Okay, higher low was created here. Previous highs were tested. We didn't test this level completely directly at this previous high here. Remember, if you ever see strong impulsive candles, I have a video on this. There's a reasoning behind why we test this level here. All right, I explained that in that video. That being said, guys, what I really want is you guys to pay attention. We tested an anticipating retracement area, right? It's an AR level because we established the definition, right? So this is going to be an AR. So what matters after the AR is tested? The previous high. Beautiful. Oh my gosh, this is beautiful. Beautiful, right? Do you guys see a break of structure happening at these highs? No, no, I don't. Now, what matters after this? If we want to get in here, that's cool. But we have to ensure that we break this previous low because lows get broken in a bearish market, right? So we break it, and then yeah, we could come back, retest, whatever, we create some structure here. Then we started selling, beautiful. We could have TP'd here, right? But if we did come and test this level again, that's cool as well. We got retracement because we know that's an AR level. Yes, it's an AR level here, right? And it can also be an AR level here because we know this is where price creates a lower high. So when we play it out, what do we see? If we don't break it, price is just trying to create a lower high. And if we just don't break it, we know price is going to go lower. Because lows in general are going to be where price likes to create a lower high in a bearish market. That's why I say if you can't wrap your hand around previous lows in a bullish market, right? You can just say lows in general. Lows can be previous lows can be AR levels. Because look, we had a retracement here. We anticipated retracement. We anticipated what? A lower high to be created. And that is how simple it can truly be, guys. If you guys can understand this concept and wrap your head around it, you're going to be in a very, very powerful spot.